for more on the global markets and how they're reacting to the growing Russia-Ukraine conflict, let's bring in our friend Remi Piet. He's senior partner at Embellie Advisory, and we like talking to you, Remi, about any subject under the sun because you know so much. Now, regarding these New York stocks, they're down for 5 days in a row now. That has got to be, I know we've had volatility since the beginning of the year in the stock markets in New York, but this has got to be about Ukraine, right? Because as they say, markets hate uncertainty.
Well, you had structural, trends, obviously, with the high inflation rate recently recorded in the U.S., a series of, profit, acquiring from past investment and people that actually made some profit over the last year. But definitely over the last 5 days, there's been a growing stress about, security and energy security in the, Russian-U.S. relationship and the impact it would have on the ground in the European Union. There's concerns, especially when you're looking at a little bit more the difference between different indexes between the European Union, CAC 40 in France, or the SBF 120 or others compared to the US. There's obviously a larger push on the European indexes, and that's because of uncertainty. And obviously, investors hate uncertainty. And the issue of energy trends and potential conflict in Ukraine is obviously rising up on the agenda of concerns.
Yeah. Now, I noticed the S&P 500, which is the broad market in New York, is now in correction territory. Again, it was there earlier in the year too, and it's back there now, which means it's 10% off its recent highs. But they're saying don't worry about it. Why is that?
Well, this was to be expected after a series of a strong surge. I mean, as I said, last year, there are obviously some concerns, and you have to look a little bit deeper into in terms of value. You have commodities actually rising up. That's often the case when you have conflicts around the globe. So gold values especially are increasing. But there's concern obviously that this conflict between Russia and the U.S. and the European Union in between will last for a longer time that was hoped. There was obviously Putin massing these amounts of troops at the border seemed to indicate that he was ready for a long haul on this, but markets were hoping that there would be kind of a ramping down the conflict, and that's quite the opposite that we're seeing with the declaration from Putin to recognize the sovereignty and independence of those two Lugansk and Donetsk provinces. And so this is actually what creates some uncertainty. That don't be worried into the long term, because I mean this is a conflict, yes indeed, that was expected. We've seen those kind of scenarios in Georgia in 2008, but the fundamentals of the economics with the coming out of the COVID pandemics are also quite positive, so that there should not be too much of a panic on this front.
Yes, yeah, you're quite right. In many ways, we've been here twice before in recent history. Georgia is one, of course, and the Crimea the other in 2014, whenever that was. Look, before this conflict broke out, it was all about inflation and when the Federal Reserve, the central bank, would move to increase interest rates and by how much in order to tamp down inflation, which we haven't seen for many years, as you know, and is generally thought to be a very bad thing if it gets out of control. Have those two issues, inflation and rates, been pushed to the back burner for the time being, do you think?
I mean, they're still there, but I mean, the most recent issue, concern was question of energy security and maybe a shift in terms of energy trades here with, the offsetting of the potential export from Russia by potentially other countries to the European Union. There's obviously a series of, 70 tankers, and that number was, from 24 hours ago from the US that were rerouted to the European market. You also have talks with Qatar, with Nigeria, with Algeria, with Egypt also as potential providers. But that question was, whether or not there were capacities for rerouting a series of energy supply that would therefore sustain the European Union's economy, because that's one that actually has been quite impressive in its recovery from the crisis. France posted a very high number in terms of growth, 7 to 8%. We also have the lowest amount of unemployment in France for probably 12 years now, if I'm not wrong. And you have also other countries that were retaking pretty, quite impressively and recovering that situation from before the pandemics. And so the issue here obviously was to see if there was, energy solutions and security around that retaking of the European economy. It seems to be, quite the case, because the European Union as a firm having enough stocks in terms of LNG, especially until the end of the winter. We're arriving to the hotter month of the year, and the economies of the European Union have been, showing quite good fundamentals. Obviously, the concerns from the very high inflation rate in the US and the, potentially succeeding the decision from the Fed will impact the rebound of those economies. But as I said, the key issue are still inflation and position on rates from the Fed and other central banks. Right. And now the concern that we see on energy security that seems to be showing some elements of improvement and limited concerns.
Now, finally and briefly, if you will, we had been expecting the Federal Reserve, the central bank, to move on interest rates in the middle of March. we were expecting it to work out like this, a quarter-point hike, maybe 4 times, ending up at about 1% at the end of the year. Now, does this Ukraine situation change any of that thinking, do you think?
I don't think it does. And what's quite interesting is to see how this movement from different Federal Reserve and the Fed and other European partners is quite well, orchestrated and planified. So it's not an element of surprise for investors. There are concerns indeed of potential, overheating of the conflict if it takes on a much more, global, at least activity of conflict. But it looks like, more likely scenarios would be a kind of stalling of the situation with a recognition of those 2 provinces. There will be obviously conflicts in Ukraine. That's the saddest news, obviously, for the Ukrainian population and the economy locally there. But it doesn't seem to be like an additional ramping of global scale conflict in the short term. And that's why investors are still quite confident that there's still also areas for potential diplomacy down the road. And there were talks of a potential summit between Biden and Putin, hosted by France, which seems to have unfortunately not materialized, but that doesn't seem that it won't be the case down the road. We shouldn't be overreacting to this situation.
Yes, because ironically, the US economy is doing okay, and corporate earnings for the 4th quarter came in pretty strongly. Remi, we have to leave it there, but thank you as always. We'll see you soon. Thank you, sir.
Have a good night.
And a good night to you as well.